The payroll tax holiday. What is it? How does it work? And is it something you should participate in? That's today's topic on the other side of the break.
1877 Levy King, Levy Levy King, 1877 Levy King, LEVY-KING.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'm going to show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. I want to give you a copy of the book for free. Just go over to www.endthetaxnightmare.com, enter your name and email, and I'll send you a copy of the book right away. Again, that's www.endthetaxnightmare.com, name and email, send you a copy of the book right away. Before we go any further with the video, take a moment to subscribe to our channel, smash that like button so you'll be notified each time we drop a new video. All right, here we go. The so-called payroll tax cut or payroll tax holiday is a new program that allows employees to take a short temporary break from paying the 6.2% payroll tax, which is used to fund the Social Security system. On August 8th of this year, the president issued an executive order to the Treasury Secretary to allow employers to suspend the collection of payroll taxes from any employee whose pre-tax wages or compensation during a biweekly period is less than $4,000. This means that if you earn less than $4,000 per year, you could see an additional 6.2% in take-home pay during this temporary period. Temporary is the key. It's important to know that this program is only from September 1st through December 31st of this year. It's also important to know that all the taxes that were deferred must be repaid between January and the end of April of 2021. So you'll have 4 months where you're taking home more money because they're not taking out payroll taxes, followed by 4 months where you're taking home less money because they're taking out double. For example, let's say you earn $1,000 per pay period. You would normally see $62 withheld from each paycheck. But under this payroll tax deferral, you would keep that $62 in each check between September and December of 2020. However, beginning in January 1st of 2021, that $62 will start coming out of your check again. But not only that, now you're going to have to be repaying the $62 that didn't come out for each week during the deferral period. So you're going to be seeing $124 coming out of each check between January and April of next year, 2021. Now, President Trump has said that if he's reelected, he's going to waive the requirement to repay the funds or perhaps make the payroll tax deferral a permanent thing. But this is a very bad idea, and it's also unlikely to happen anyway. Here's why. You see, laws regarding the tax code must originate in Congress, specifically the House of Representatives. And the Speaker of the House, Nancy Pelosi, doesn't favor this payroll tax deferral. And she's already said that she will not introduce any bill making the deferral permanent. The other problem is that the payroll tax that we currently have in place, the system we have now, is what funds Social Security, disability, and retirement benefits both, which most of us are going to need at some point during our lives. Without the payroll tax, Social Security would be dramatically underfunded. So it's very likely that no matter who is president, if you defer taxes from September through December of 2020, you're going to have to pay them back by April 30th of 2021, or you'll risk having to deal with IRS collections. But what if you lose your job or you're otherwise unable to repay the deferred taxes in such a short repayment window? Since this is such a new program, the government has not issued any firm guidance. So as far as we know, it would be treated like any other tax debt, which means that you need to enter into a payment plan or try to settle the debt, possibly via an offer and compromise. Now, my take on it is that the program offers very little benefit. Every dollar you defer today, you'll have to pay back in just a few months. And if you can't repay those deferred taxes, you're going to end up accumulating some tax debt plus interest and penalties. Now, speaking of tax debt, if you owe back taxes to the IRS of the state, I want you to know that there are special programs in place to help you get a fresh start and get out from under this tax debt. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start or learn if you're eligible for the Fresh Start program. Just head over to www.LEVY-KING.com or click on the link below. Follow the prompts and enter a few simple questions, and my team and I will help you figure out your eligibility. That website again is www.LEVY-KING.com. Or if you're not a website kind of person, you can just pick up the phone and give us a call. We do still answer the phone. That's 1-877-LEVY-KING. That's our number. Our number again is 1-877-LEVY-KING. Give us a call and we'll help you figure out if you qualify for an IRS fresh start. Well, that's it for this week, guys. Talk to you later.